This program has been sponsored by Diaspora Digital Media in partnership with DAMA, Digital Assets Management Academy based in Abuja. Um, Today we are looking into another topic within the same concept of digital assets. And the topic we are going to look at today is cryptocurrency, understanding digital exchanges, cryptocurrency, understanding digital or centralized exchanges. And as always, we have two guests today. First person is Mr. Moses Obaje, our digital chief. Mr. Moses, you are welcome to the program.
Thank you, Mr. Tuchuku. Happy
And
being here once again.
nice having you again. And now we have our digital mama, Mrs. Shifra Poloba. You're welcome to the program, ma.
Tochukwu, thank you for having us this morning.
Okay, I'm glad to meet you again. And of course, this program is being co-hosted uh, with Ibrahim Umawase. Ibrahim Umawase, you're welcome.
Mr. Tuchuku, you are muted.
All right, okay. Mr. Obaje, we have talked about centralized exchanges in the past, in our past conversations, but today we are delving squarely deeper into the topic. So let us have, first of all, the understanding of what centralized exchanges are.
All right. Good morning, Mr. Tuchuku, and good morning, my listeners. Please confirm if you can hear me loud and clear. Kindly do well to confirm if you can hear me. Am I audible?
Yes, you're audible. You're audible.
All right. Thank you. Just like you rightly mentioned, we've talked about centralized exchange in comparison with decentralized exchange, but those many, just like you rightly said, we are going to be looking into understanding centralized exchanges. And you asked me what are centralized exchanges? And based on knowledge and based on research, centralized exchange refers to a digital platform that facilitates the trading, as to talk about buying and selling of various cryptocurrencies or digital assets. Now, for centralized exchanges, they operate as intermediaries between users, now providing an online market space where participants can exchange digital assets for other cryptocurrencies or fiat currencies. Now, all centralized exchanges are called trusted middlemen. All right, they are in the middle between the buyer and the seller. Now, I want us to understand that centralized crypto exchanges are businesses that provide exchange services for traders, investors, and users. Centralized cryptocurrency exchanges are regulated by the governments of the countries in which they operate. Now, what are the elements of these centralized exchanges? Centralized exchanges are owned by a single entity or a group of people. And these exchanges are governed by this group of people or that personality. Now, they provide security measures for users. They manage user accounts and capital. That is to say, they manage your account and even the capital you use in doing the business. So that means the capital that you have for business is in their hands. If there are disputes amongst partners, maybe a buyer and a seller, they settle dispute for such parties. They allow fiat currency and cryptocurrency exchanges. They also match buy and sell orders between customers. You want to buy and somebody wants to sell, they match these orders. Now they collect identifying informations about users. For everybody that is to operate on a centralized exchange, the owners, all right, collect identifying informations from such users. And also, they place funds in escrow services to protect users. Now, in the crypto space, centralized exchanges allow people who are connected to the internet to buy, sell, and swap crypto assets. Like I said earlier, it is owned and operated by a private company or a private individual, which means it is subject to the laws and regulations of every jurisdiction it operates in. The law governing it in Nigeria might be different to America, might be different in Austria, might be different in China, and whatever country. But they are subject to the laws and regulations of every jurisdiction they operate in. A centralized exchange requires users to sign up and open an account to participate, and a majority of these centralized exchanges demand your know your customer, anti-money laundering, and ID verification to trade. Okay, that's my little brief with regards to what is centralized exchange. Thank you.
Move to the next speaker. Let me ask you, how does centralized exchange differ from decentralized exchange, from what you've just talked about? Mr.
Uh,
Obaje?
okay.
All right. Based on knowledge, centralized exchanges and decentralized exchanges are both platforms that help buyers and sellers trade. Exchange is operated by a single entity.
I can't hear you clearly.
Okay, confirm you can hear me now. Can you hear me?
You are loud and clear.
All right, thank you, madam. So, Mr. Tochukwu, I think it should be from your end. Can you confirm if you can hear me?
Your voice is breaking.
Please go ahead.
I don't know if anyone else is hearing you, but I can't hear you.
Yeah, we can hear him louder.
Please go ahead. We can hear you.
All right, thank you. Now, like I said earlier, centralized exchanges and decentralized exchanges are both platforms that help buyers and sellers to trade. Now, while a centralized exchange is operated by a single entity, a decentralized exchange is run permissionlessly through smart contracts on a blockchain. An entity or project may help set up and maintain a decentralized exchange, but it can run itself as long as people provide liquidity. But for centralized exchanges, liquidity is provided from the onset by the owners of that exchange. So that's the difference between a centralized exchange and a decentralized exchange. There are other differences. Unlike the centralized exchanges, to use the decentralized exchange, you only require a crypto wallet and some crypto assets. Now, due to its decentralized nature, there's no registration or account that is required. But in centralized exchanges, registrations are required, where you need to do your KYC. Now, centralized exchanges like Gemini can offer customer support and a more user-friendly experience. However, they are susceptible to attack. They take higher transaction fees from users. Their solvency is opaque, which leads to the last and most important weakness. So they require users to relinquish custody of their funds. That is centralized exchange. Users need to relinquish the custody of their funds to the owners of that entity. Now, the last point I've just mentioned, which has to do with relinquishing custody of your funds, proved to be disastrous for many people who put their trust in centralized exchanges, which went insolvent in 2022. Of recent, like we know, Bybit was hacked and some Ethereum were taken out of Bybit. However, it was said that it has been recovered, but that's one of the disastrous aspects of centralized exchanges. So in contrast, decentralized exchanges offer custody of funds, data protection and privacy, and lower barriers to entry, but can currently be more complex to use and lack fiat and off ramps. So that's the little I can say about decentralized exchange. Thank you.
All right, Mr. Budget, before I hand over to my co-host, there are certain terminologies that when you bring up here, you have to make it absolutely clear so that some of the persons in the audience will understand. Somebody just asked, what do you mean by liquidity? And also you talked about KYC. Is it KYC or KCY? So please, could you please delineate on these two terms? Thank you.
Now, KYC simply means know your customer. It's just like opening an account in a bank. Okay, there are some legal documents that are required for you to have an account with a traditional bank. So those documents that are being required are just documents used for the bank to know who you are. Who are you? What is your personality? All right, where are you coming from? So that is KYC. All right, and then I think you made mention of, I think, liquidity, right? Now,
Yes,
liquidity is the ease with which an asset can be converted into another asset without affecting its current market price. All right. So liquidity is a form of an asset that is kept somewhere so that assets can be transferred from one person to another without affecting the price, the current market price of the commodity that is being traded. Thank you.
thank you, Digital Chief. All right, let's bring Ibrahim Omawase now. Ibrahim.
Good morning, everyone. Good morning, Mr.
We can't hear him.
Am I audible now?
Yes, John.
All right.
Yes.
So, good morning, Mr. Moses. Good morning, Mrs. Poluma.
Good morning.
To our audience, you are
Morning.
watching Blockchain World, a program that runs every Wednesday, 11 a.m. As always, our mission is simple: to separate signal from noise, hype from reality, and fact from fiction. So let's get straight to the matter. As we learned earlier from our AI prof, Mr. Obaje, we learned that while DEX allow peer-to-peer transaction without intermediaries, central exchange act as a middleman, often providing faster transactions and customer service, but with less user control. And with that differences come another important dynamic, identity and regulation. So Mrs. Poloma, why do users need to create an account to use a centralized exchange? And why is KYC necessary? Is it about control, compliance, or customer protection? Thank you.
Thank you, Ibrahim, for that question. It is obviously necessary for customers to provide their to register and then provide KYC in a centralized exchange. As earlier said, when we talk about centralized exchange, we mean there's somebody that runs this outfit to enable users to exchange, trade, exchange, swap as necessary. And centralized exchanges are regulated, just as we have the banks being regulated. So it is obvious because they are under a regulation, there's need, that's why anybody coming to register or take up a place with them must be known. He must have, or she must have, must register and then do the necessary KYC as we do in banks so that they will know you. This, why we create accounts is to enable us to access trading and then for our assets to be able to be managed and then for us to be able to do transactions within the system. Like I said, because of regulatory compliance and then the prevention of financial crimes, as well as enhanced security, whereby the users are verified at every given point in time to enable that, to avoid scams and what have you. Like earlier on, Prof said, when transaction goes on, they match trades between buyers and sellers as well. And then because of this matching, per adventure, there's a default from one of the partners. That's where these centralized exchanges come in. They stand in and then ensure the appropriate modality that has been set out is followed. And then the KYC that is done involves personal identification, just as we do in the banking system. So our documents, they can ask you to upload your documents to ensure, and then to ensure that, yes, you are human and you have a designation, a place where you stay for easy identification and tracking. And sometimes you even do, nowadays, with the coming of artificial intelligence, you have to, sometimes they ask you to take a live snapshot of your face, you understand? And then, like I said, the benefits is for security, for regulatory compliance, and the protection of the users as well. These are all modalities that when you create your wallet on a centralized exchange, it ensures that there's compliance and regulatory requirements, even set for them by the governments or wherever they are, is followed to the latter. Thank you.
Thank you very much. Our next question is, what we learned based on what you said is some of the centralized exchange offers different services, jurisdiction, and regulatory standards.
Yes.
So, Mrs. Poloma, what are some popular examples of centralized exchanges that our audience might already know or interact with, especially within the African crypto landscape?
Okay, we have Binance, even though for us in Nigeria, there are still some issues. But then the Web3 of the Binance is available to everybody. That's their DEX, their DEX is available. We have Coinbase. Binance is known for its wide range of trading options. They have low fees, and there's global reach as well. So it is considered one of the best centralized crypto exchanges that we have in the world. Then we have Coinbase, a well-established exchange with a strong security measure and regulatory compliance. This is popular among institutional investors and retail traders. Then we have OKX, which offers a robust trading ecosystem with advanced tools. Staking, you can stake and then earn, meaning you can put your funds to work and then earn interest on your funds as you stake them over a period of time as per your choice. Then it offers flexible trading options, and though there's competitive fees that are charged when you do perform these tasks. We equally have Bybit, which is a fast-growing exchange that focuses on derivatives trading, and it has a high level of options, and it is user-friendly, because even if you are a newbie, by the interface, you can easily manipulate or find your way through. And this, among many other exchanges that we have BitGate, which is known for its high leverage of trading, and also the user face is friendly. We have Huobi Global, which is called HTX. This exchange offers spot trading, futures trading, margin trading, and many more with a comprehensive blockchain ecosystem. We equally have Bitmart, which features an NFT non-fungible token marketplace, and it has an advanced trading tool. We have Mexi, which is a global exchange as well, and it is recognized for its high performance trading engine and advanced transaction when it matches technology. This, among many other exchanges that we have a host of them, but I just mentioned a few out of the lot that we have with their uniqueness when it comes to transactions and what they offer to anybody that chooses to, create an account with them. Thank you.
Thank you very much, Ma. And I think it's high time for our audience to have their Jota beside them, because some of the things like NFT, non-fundable tokens, KYC, know your customer, and CEX, centralized exchange, DEX, decentralized exchange. So we're supposed to be recording all this. And with that, I would like to bring my co-host, Mr. Tochukwu Raphael, for the next question.
Okay, thank you. Why I love this conversation is that this is not just any kind of conversation. It is a lecture. This is a classroom. That's why we have our jotters. Everyone should have his jotter by the side, so that any strange term that one does not understand, one notes it down. So let me bring Mr. Obaje back. You talked about liquidity earlier on, where you said that it has to do with the ease with which one asset is transformed into another without a significant change in price. Now, how do these centralized exchanges? How do they manage this liquidity and how do they make money?
All right. Mr. Totu, before I get to that question, I just want to add a little to one of the questions that was asked by Ibrahim to my
Okay.
co-presenter this morning on why do users need to create an account to use a centralized exchange.
Okay.
All right. I just want to make more emphasis on that before I get to your question. Now, before you can start trading on a centralized exchange, your identity must be verified. Who are you? Like I said, that is, you need to complete your KYC, know your customer. There's what we call anti-money laundering,
Laundry.
AML.
Yeah,
There is counter-terrorism finances,
sure.
CFT. All these checks need to be conducted because of lack of regulation of the crypto space.
Please,
All
yeah.
these checks now, because decentralized exchanges are, are monitored, all right? So they are afraid of maybe somebody who is a terrorist transacting on their platform. You know, terrorists will want to come in anonymously and make transactions.
Sure.
But on the centralized exchange, you cannot come in and transact because these all important procedures help exchanges prevent criminal activity from taking place on their platforms.
Mm.
All right. Now, it's not just coming in, picking a strong password and a unique
Yeah.
username as far as opening an account is concerned.
Mm.
There are extra steps that are involved. In fact, some of the crypto exchanges, it will take you time before you can pass their know your customer preferences.
Sure.
So it is part of the risk-based approach set by regulators and organizations. And the purpose of KYC is to reduce identity theft
Left.
and fraud. Because somebody can come and claim that he is Moses or Baje.
Mm.
He's now stealing my identity. Now, if there is no such checks in place, he can come and do whatever he wants to do in the name
Sure.
of Moses or Baje and go
Yes.
scot-free. But because there are now identity checks, he cannot come and have his way just like that. So they collect and verify key data about customers to truly understand who these customers are. Now, despite attempts to shortcut or circumvent KYC,
Mm.
which has to do with cryptocurrency regulations, now the growing cryptocurrency market and more mainstream appeal virtually guarantee that KYC rules will not
Mm.
only expand for exchanges, but also spur increased regulatory enforcement as far as the centralized exchanges
It's
are
concerned.
concerned.
Yeah.
Now, sorry, I'm taking time on this because it is very, very important for our listeners to understand challenges that come with quick KYC regulations. I just want us to know that centralized exchanges stand to gain substantive benefits by ensuring regulatory compliance, including but not limited to the following: and trusts, because when you verify user identities, there is that transparency and it builds a customer's trust. When users are confident that your crypto exchange is taking proactive and precautionary measures to protect their accounts, they are more likely to continue using your service. Number two, now reduced potential for money laundering and other scams, like I mentioned. Now, in 2016, I think we had about 24,000% instances in cryptocurrency scams. Now, robust identity verification can significantly reduce this fraudulent activity on the centralized exchanges, and this will boost market reputation. Because one of the challenges that the crypto space is facing today is the market reputation. People are scared that when they come in, they are going to lose their money, they are going to lose their assets. Why? Because of the reputation. And that's why the act of KYC will reduce potential for money laundering and other scams. There is reduced legal risk. The company will not want to be handling legal cases here and there. This one is fighting this. My money has been taken from this person. I have lost this. Once there is that know your customer in place, the owners of these companies do not have a lot of challenges with legal issues. Okay, so they will focus on streamlining transactions, conversion rates, and ensuring compliance with evolving international guidelines. The guidelines in Nigeria will be different from that of China and what have you. So they will be focused in dealing with such issues. So by demonstrating KYC due diligence, companies can reduce their risk of legal challenges or regulatory penalties. And then it causes for an enhanced stability of the crypto market. Like we know, the crypto market is notoriously volatile. All right? But increased identity verification as part of Know Your Customer programs can help stabilize the market at large and boost its market value. So KYC fosters confidence, knowing that all members have undergone identity verification adds accountability in case of suspicious activity. So that's I said, let me add more to what our digital mama have just said with regards to registration and why KYC is needed. Having said that, the crypto space, the blockchain space, one of the criteria or one of the advantages is anonymity. But this time around, when we are talking of a centralized body, the issue of anonymity is not really put in place so that things will be done orderly the way they ought to. So thank you. So you can come up with your question now. Let me see if I can attempt your question. Thank you.
Okay, I was asking about the liquidity, how centralized exchanges manage liquidity and how they also make money.
Oh, all right. Thank you for that line of question. Like I said earlier, liquidity is the ease with which an asset can be converted into another asset without affecting its current market price. Take note, without liquidity, there is no asset that can be converted in the crypto space. And that is why some people put in their money in scams, and when they want to go and take their money out of such projects, they will not be able to remove their money or the interest they see in that business because liquidity has already been removed. So both buyers and sellers benefit from the essential market dynamics liquidity enables. And markets with low liquidity are more susceptible to volatile asset prices, gridlock transactions, and market manipulations. Now, let me explain. When you have a low liquidity in the market space, there is that tendency that when you are buying or selling, the charge for such transactions will be high because the liquidity is low, okay? And there might be delay in transactions. Despite that, we know blockchain as a very speedy platform for transactions. When there is low liquidity, there will be that tendency that your transaction will be slow or might not even go through. That's why we call it gridlocked transactions. And the markets can always be manipulated because maybe by the time you are putting up your trade, the price is this. And because of that gridlock in transactions, when the transaction is being executed, the price might have changed because, like we all know, like I said, the cryptocurrency space is notoriously volatile. So liquidity, which is the ease with which an asset can be converted, is essential for facilitating quick and seamless market transactions. Now, centralized crypto exchanges will not be able to offer a seamless trading experience without liquidity. So by liquidity management over a crypto exchange, it means creating adequate trading activity for assets that can be bought and sold with minimal impact on price. Now, for traders and investors alike, liquidity means the thin line between a profitable, cost-efficient trade and one eaten by slippage. Now, slippage simply means that little charge that will be taken from your transaction. All right. So that being said, centralized exchanges maintain deep liquidity by pulling funds from a vast user base. Yes. Now let me bring it down, or let me break it down more. The higher the number of transactions within the exchange, the higher the liquidity. Let's assume they are transacting $100 million worth of transaction in a day. All right, the liquidity in that exchange will continue to skyrocket because money is coming. Money is being flowed out. But where an exchange is having just 100,000, because there's that tendency that transactions will not move seamlessly in the than even decentralized exchanges. This ensures that traders can buy and sell seamlessly and instantaneously at stable prices. Like I said, once there's a delay in transaction, there's also that tendency that the price will automatically change when the transaction is being executed. So high liquidity minimizes price spillage, allowing for smoother transactions, especially during market volatility. When the market is up, down, but when there is enough liquidity, then there is that tendency that there will be a smooth transaction when that business is being carried out. So centralized exchanges, which we call custodial crypto exchanges, source liquidity in the same way as traditional financial institutions do, either by providing crypto liquidity using in-house assets reserves or using a liquidity provider such as a third-party market maker. Now, in-house asset
Mr. Baji, are you still there?
reserves. Now let me break for a bank. Confirm if you can hear me, please.
I can hear you. Speak on.
All right. For a traditional bank to be registered in my country, there is what we call a capital base. That bank must have a certain amount of money before it can be registered. Now, in centralized exchanges, there should be what we call the in-house asset reserves, whereby that will serve as the liquidity for that exchange, or liquidity providers such as third-party market makers. Now, there are also some instances of cross-exchange market making, in which a larger exchange that acts as its own market maker provides liquidity services to a smaller exchange that doesn't have sufficient in-house funds to cover their trades. So these big exchanges like Binance can come in, all right, and provide liquidity for another exchange that knows that I don't have the full capacity, or I do not have sufficient in-house funds or in-house reserve to cover my trades. So these are ways whereby exchanges generate liquidity. Some have reserves, some have third-party market makers who come in into the market to buy and sell. As people are buying, are selling, they are buying. All right? And as they are buying, the exchange is making money, of which the liquidity pool of that exchange is also growing because there are incoming transactions. And once they are selling, somebody is buying. When you are buying, somebody is also selling. So liquidity is always made available by what we call the market makers. All right. That being said, by contrast, now specialized third-party market makers provide liquidity by accepting all buy and sell others in the markets. Thereby, they are servicing, they are acting as intermediaries that facilitate seamless trades. As a result, buyers and sellers in this market don't need to independently find one another and settle on a mutually acceptable transaction price. Now, how do these market makers make money? They make money by charging a spread on the bid and ask prices of the assets they trade. On the assets they trade. That's why you see somebody will tell you, okay, I am going to sell my own at $1. Somebody will say, I will be selling my own at $0.8. All right, these are market makers. This one is selling at 0.8. He will not sell at $1. Once you get an affordable buyer at 0.8, he sells. But somebody who is now selling at $1 will not sell at $0.8. He will only sell when he gets somebody who is willing to buy at $1. They don't need to come into negotiation to ascertain, okay, I'm going to buy at 0. No, he has already stipulated his price, and it is only when a buyer who feels that price is okay for him goes in to buy from that person who is selling either at $0.8 or at $1. So, how do these exchanges make money? I think that's one of your questions. Now, exchanges make money through diverse revenue streams, which include trading fees, withdrawal fees, staking services, and even lending products. But however, trading fees are the primary revenue source for most exchanges, with top platforms handling billions in daily transactions. So that being said, they have a range of revenue generating strategies, with trading fees, like I said, leading the way. But their income doesn't stop only on trading fees. So let's try and take a look at the primary revenue streams for crypto exchanges and probably the numbers behind them. Now, trading fees. Like I said, trading fees are the primary source of crypto exchange revenue. Every time a user buys or sells a cryptocurrency, the exchange takes a small percentage of the transaction. Now, with trading volumes often in the billions, these small fees quickly add up and you see a robust centralized exchange. Now, most exchanges use a maker-taker model to determine fees. Makers are users who add liquidity to the market by placing limit orders. Now, in trades, there's what we call limit orders, and there is what we call market orders. That will be another training for another time. We have limit orders and and market orders. Now, let me differentiate them. Like I said, makers are users who add liquidity to the market by placing limit orders. Now, how do they place limit orders? They place a trade, just like I mentioned. I am going to sell. The market might be at $0.5, but they are saying I am going to sell at $1. They've already placed the market, the money has gone into the exchange, but that trade has not been executed. So that means that money they have put in is in the liquidity pool of that exchange. And it will be there until their trade is executed at $1. But it will take the next 1 month before it hits $1, it will still remain in the liquidity pool of that exchange, thereby boosting the liquidity of that exchange. Now, when they are to be charged for that transaction, they are charged lower transaction fees than those who are takers. I said market makers and takers. Now, market takers are those who remove liquidity by executing market orders. Market orders are that trade that you tend to sell or buy at the price of which you are seeing at that moment. The moment you execute that trade, within a twinkle of an eye, that trade is executed. That means you are selling and you are taking out money from the liquidity pool. Now, these fees that I'm talking about, these trading fees typically range from 0.1% to 0.5% per transaction, depending on the exchange and the user's monthly trading volume. Your trading volume also matters with regards to the fees that you are being charged per transaction during trading. And that being said, another way that these exchanges make money is withdrawal and deposit fees. Now, withdrawal and deposit fees offer another revenue stream for exchanges, though they vary significantly based on the type of transaction and the currency involved. When users withdraw cryptocurrencies, exchanges typically charge a fixed fee to cover blockchain network costs, which vary depending on the assets. Now, for example, when you are withdrawing Bitcoin on Binance, it incurs about 0.00005 Bitcoin as fee, which is approximately about $17 or so as of recent BTC prices. Now, these fees contribute substantial revenue for popular exchanges with millions of daily users. While it is not so lucrative as trading fees, withdrawal and deposit fees still generate millions of dollars annually for exchanges. Now, with sheer number of transactions processed by top exchanges, these seemingly small fees accumulate into a significant source of income for such exchanges. Now, we have listing fees. I'm just talking about ways where these exchanges make money. Projects usually pay exchanges to list their tokens and gain visibility with millions of potential users. Now, for a new cryptocurrency project, a listing on a major exchange can mean exponential growth in adoption and visibility, and exchanges capitalize on this demand. Now, listing fees can vary widely. For smaller exchanges, and fees can start from $5,000, $10,000, while major platforms like Binance reportedly charge as much as $1 million per listing. Now, these fees are justified by the high exposure and a potential trading volume a listing on Binance or Coinbase can bring. Now, if you could remember in my last outing, I talked about a token, the body scan AI. I know you will remember. Now, the body scan AI is not yet listed on any of the centralized exchange. It is on the decentralized exchange. Now, sooner or later, this token will come live on centralized exchanges. And as it is coming, the dev team or the community that is behind the body scan AI will have to pay some of these exchanges to list this token on their platform. Why is that so? Because once body scan AI is listed on any of these centralized exchanges, it brings about exponential growth in adoption and visibility. That's why I was saying the other time that those of us who want to have high return on our investment, we need to get this token now that it's still in the decentralized exchange. So that by the time it goes to centralized exchanges and gains this exponential growth and adoption and visibility, guys, you are done. It is not a financial advice. I'm just using that as a case study. Because once projects gets to centralized exchanges, from decentralized exchanges, they gain more traction. They gain that exponential growth in adoption and visibility. And the early adopters of such projects, all right, make good returns on their investment. So when you see centralized exchanges putting a high cost on listing fees, don't blame them, because they know that those who are listing these tokens or these coins are also going to make good returns on their investment, because there will be an exponential growth in adoption and visibility of that token or that coin. Now, another way that centralized exchanges make money is margin and leverage crypto exchange fees. Now, margin and leverage trading allow users to borrow funds to make larger trades, amplifying both potential gains and risks. Yes, when they borrow, they can make potential gains and they can also be on a high risk. Now, so exchanges make money here by charging interest on fees based on the level of leverage. Leverage. Now, let me explain leverage. Now, when we talk of leverage trading, let me take Binance as a case study. It offers up to 20x leverage on certain, allowing traders. Let's assume you have $10 and then you want to leverage that $10 in margin trading. All right, that $10, when you get 20x leverage from that exchange, that means that $10 becomes $200. And once that trade is executed and you make money, you make huge money. You are no longer trading with $10, but you are trading with $200, though it has its own risk. So interest rates vary depending on the assets, depending on the market condition, and borrowers are typically charged an additional fee for accessing leverage. So they make money from margin and leverage crypto exchange fees. So margin trading fees combined with interest from borrowed funds represent a significant income stream for exchanges. In fact, in some cases, margin trading can account for over 20% of an exchange's revenue. Over 20% of an exchange's revenue. So there are other revenue streams for exchanges. We have staking services and yield products. We have the lending services. We have token offerings, where we have initial exchange offerings. There are also profitable ventures for exchanges, all right, where new blockchains sell their tokens directly on exchanges, providing immediate exposure to a large user base and benefiting from the platform's credibility. There are most people who mine these tokens. Okay, there are tokens that after you mine them, when it is time for listing, they list on an exchange immediately. Immediately. So we call them initial exchange offerings. You know, there's initial coin offering, right? ICOs, but this one is IEOs, initial exchange offerings. They list on the exchanges directly. And because they are listing, there's a large user base, and because that token will gain the platform's credibility, they also charge fees. So exchanges typically take a cut from the funds raised in an IEO, often between 5 to 10% of the total amount of that initial exchange offering. So that is the breakdown of how centralized exchanges make money, and that's why they make stupendous income. So thank you, Mr. Tochukwu.
Oh, thank you. That was a comprehensive one coming from Mr. Obaje, digital shift. I know if we left you, you could say more, but because of time, I must remind our audience that this is Blockchain World, a program developed by Diaspora Digital Media in partnership with DAMA, Digital Asset Management Academy. Now, this academy is not just any kind. In this academy, we have experts, we have individuals, personalities who are the repository or the fountain of knowledge as long as blockchain, cryptocurrency, or digital assets are concerned. So, because of time, let's go to the pros and cons. But this time around, Mrs. Poloma will answer, or we deal with this one. Let's move to the pros and cons, or the advantages and the disadvantages of centralized exchanges. What are the pros and cons?
Thank you, Tochukwu. Centralized exchanges often provide user-friendly interface, and they have simple trading processes that are not like too difficult to, once you are there, it's like easier for one to navigate through the centralized exchanges. And secondly, decentralized exchanges, as Prof. earlier said, because of the quantum of transactions that go on, the fees charged for ICOs, IEOs, trading, lending, staking, and what have you, they have high liquidity, meaning there's enough funds for buyers and sellers, lenders, and what have you to be taken care of. Like for the lenders and the stakers, keep their funds, their assets, so that they will gain. So it's the gain is just there because they have high liquidity. And then another advantage of having a centralized exchange is the advanced features that it has, such as like the earlier speaker said, there's margin trading. You can do stop loss or take profit. I think maybe at another time, we'll be able to holistically look at these terms that I'm talking about. When we talk about stop losses, you can place a trade, and then according to the size of your dream, maybe I want my trade that I have placed to earn maybe 1% or 2%. You can put a stop loss as to per adventure. That trade does not reach where you will take your profit. Even if it falls below where your stop loss is, you will not lose much. Same thing with taking profit as well. You can take your profit. So, and then this advanced features. At times you find that's why these days we have what we call bots trading for people. Bots trade for people to minimize the emotions that ordinarily you put into it. Another advantage of centralized exchange is that it typically provides customer support. In case anything goes wrong, if you need questions to be answered, there's always a customer support where you can rely on, unlike what we have in the decentralized exchange where you are on your own. If anything goes wrong, if you're not careful, you take responsibility for your actions. But in a centralized exchange, you can quickly raise an issue with the support because there's always a support ticket. Another advantage of centralized exchange is that it provides a wide range of assets, which normally in a decentralized exchange is limited. So a lot of cryptocurrencies and tokens that are already listed are there. And then the use of fiat currency of various countries is equally there, unlike in the decentralized exchange system where it only deals with tokens, coins, and what have you. With all this, where there are advantages, there are also risks, certainly. Risks in the centralized exchange are vulnerable to hacking. If an exchange is hacked, it affects virtually those that are using the services of that very particular exchange. And we have also regulatory risks. CEX have to comply with evolving regulations, and failure to do that can result in fines and even shutdowns if they are not able to adhere to any country at all. I remember Binance had an issue with Nigeria, where even one of them was, kept in custody. These are all relating to compliance issues. There are also counterparty risks. What I mean here is that users must trust a centralized exchange to manage their assets and execute trades fairly. So these are some of the risks. If there's manipulation, out there you are already in the exchange and there's nothing you can do. Sometimes there are downtime and technical issues that may prevent you from even trading. Maybe immediately you start placing your trade, or you place your trade, you want to put stop loss, and then there's technical glitches. You'll discover that there's nothing you can do. You just have to wait for the exchange to come up. And sometimes these exchanges can go on maintenance. When they go on maintenance, it affects virtually the users that they are providing services to. Then we have asset custody risks. Since you don't manage your assets, it is managed centrally. Anytime there's the system, their exchange is hacked, certainly, because your funds are with them, you are equally at risk. And then, but then there are other ways we can do to mitigate these very particular risks. That is why it is important for one to have adequate knowledge of any exchange that you are going to put your funds, because they are going to manage it. Unlike in the decentralized exchange that you are whatever you do, your funds are with you, they are not with them. And then ensure that your security, you adequately secure your account with them. The two-factor authentication, maybe at some other time we may have a demonstration of how these things look like, how to set them up, and other security measures must be done to protect your account, to avoid identity theft. And also there's need for you, because you are operating in a centralized exchange, to always monitor your account for suspicious transactions, because they can happen. And then there's need for one to diversify in order to mitigate the risks. Don't put all your assets in a centralized exchange, because you will not have control over them. So you should it's like we'll always advise, if you are going into trading, just put the little that you want to use to trade so that your funds may not be trapped. I remembered some time back, Luno too had issues with Nigeria. They stopped operating and what have you. I had funds there and I couldn't access it till the issue was resolved. So these are the disadvantages of putting all your eggs in one basket, I would say, especially in the blockchain industry. Learn to diversify. There are so many wallets you can safely put your assets. But in a centralized exchange, just have it at the back of your mind that any of these disadvantages that we have mentioned can happen. If an exchange has a downtime, it affects you because you cannot perform any transaction or do anything. So I think basically by understanding the advantages and the risks of using centralized exchanges, users can make informed decisions. And that is why Dharma Academy is here to offer this knowledge to people, to anyone that will join us. Though we have paid classes for in-depth learning, but we provide these services in our various platforms free. We have physical academy where you will sit and learn. Then we have online where you'll be given adequate time. These are paid classes. But for what we're even doing here with DDM, the platform has offered us to provide these services, this knowledge, free to whoever that is listening to us here. And this knowledge helps you to navigate the blockchain space with at least adequate knowledge and with ease. Thank you.
All right, thank you very much, Mrs. Poloma. Our time is running out. May I bring in Ibrahim to uh, do the rest of the thing? Ibrahim.
Thank you very much, Mr.
We can't hear.
Mr. Ibrahim, you are muted.
Can you hear me?
Better.
All right. I said thank you, Mrs. Poluma and Mr. Obaje, for the knowledge you impacted in us. Indeed, as a matter of fact, any one of us here that is listening and is not willing to rush and register with Dharma Academy, I have to ask, what are you waiting for? So, as Mrs. Poluma said, they have a paid classes for in-depth learning and online classes. These paid classes can be online and physical classes. And there is an online class also that is free, and this one also that is free. So for our audience, I decided to open a group for our dedicated audience. This one is a bonus. For those of us who want mentorship from these resource persons, should drop your number in the comment section so that I can take it and add you up in the group. We have some questions, and I'll direct my first question to Mr. Obaje. They said, which of these two systems is better and safer? From Mr. Solomon.
Get that question. You were breaking.
Mr. Obaje, can I repeat the question?
Yes, repeat the question, please.
Okay, which of these two systems is better and safer?
All right, thank you. From the two systems, that is the centralized and centralized exchange. Now, our digital mommy made mention of one thing. Where there is advantage, there is disadvantage. So every one of them has its own pros and cons. All right? But I and it is advisable that you use the two. It's advisable to use the two. Now you can use decentralized exchanges for storage, long-term storage, for security reasons. You want to be in control of all your assets. Use decentralized exchanges. But if you want to do business, you want to trade, you want to make some money, all right, then you should have some on the centralized exchanges so that you can use those funds to transact, all right, to trade and make some money. Or maybe you want to go on staking, you want to stake, okay, you can, because when you stake, you still make interest. When you trade, you still make interest. So I will advise, there are two ways to it. If you want to be a trader, a businessman that will want to consistently trade, make sure your capital for the trade is on centralized exchange, while your assets, all right, your digital assets should remain on the decentralized exchange. Because now, if you say you will entirely not deal with the centralized exchange, you are doing yourself no good. Now, at the point where you want to convert your digital assets to fiat currency, you have to deal with centralized exchanges because you cannot convert on the DEXs, which are the decentralized exchanges. So you must have to deal with the two at one point in time. That's my advice. Thank you.
Thank you very much, sir.
And I think I want to add small to what he has said.
All right, ma. Go ahead.
When it comes to user experience, decentralized exchanges may be more suitable for beginners, while the DEX may be a little bit complex, but with time, when one learns, you'll be able to decipher the two. But as he rightly said, it's absolutely, you need the two. You just need the two. But then bottom line is,
thank you.
The majority of your quantum of your investment that you want to safekeep should be in a decentralized exchange in your wallet, because you have absolute control over it. What you want to play around with, you can be taking it to the centralized exchange to trade, and then maybe convert to fiat, as the case may be. Thank you.
Thank you very much, sir, for this comprehensive answer, Sama. Thank you for this answer. And the second question, I think it has been answered already, and is from Mr. Madioke. He said, elucidate some pros and cons of this exchange. I think it has been answered in the course of the program. The last question number 6. So the last question here said, what's always determine the listing price of token coins in exchange? And Mrs. Puluma.
I think Puluma, what determines the listing of a token on an exchange? There are so many varied factors. If, like, for example, they may look at the use case and then the community growth behind it, and then the dev of the development, the creator of the coin, depending on when he wants the coin to be listed, that is a determinant. The community engagements also can determine the listing of a coin or a token on a centralized exchange. It has a lot of, there are processes that it undergoes for it to be listed. And so they are varied, there are many. And that is why maybe the person could be asking in line with body scan AI. if I'm not mistaken. There's every likelihood because, like we said, body scan AI is on DEX for now, but it doesn't stop it getting into the centralized exchange in the nearest future, based on the community engagements and other factors of raising fees for it to even be listed on the exchange. If we refer back to what Prof said, he said another means for these centralized exchanges of any revenue is when coins are listed, tokens are listed, they charge fees. So these are some of the criteria for having a coin or a token to be listed on a centralized exchange, out of the many other numerous reasons that we have. I don't know if Moses has anything to say to add what I've said. Prof.
No, I think, madam, you've said it all. You've said it all. There are a lot of criteria for tokens to be listed. Those are some of the major key issues. The dev also has a part to play. All right, the community has a part to play. In fact, let me just give you why you cannot body scan AI is yet to be listed on the centralized exchanges. In fact, one of the interactions with the dev, they said they are focusing on the app at the moment. Why? Because they don't want distractions here and there on that project because it is a utility-based app that has to do with life and death. When you talk of health, you talk of also life and death. So they are basically focused on the development of the app. And if you go and check their white paper or their tokenomics, you will see where massive marketing comes into play. You will see where engagement with centralized exchanges come into play. So it's still they are still on the journey. However, if the community decides to say, okay, we want to press on without the devs coming in, we want to press on and see that this token gets listed so that we'll have more adoption, the community can do that. There are procedures the community will follow, and that will also be done. So that is my addition to that, which Digital Mama have just said. Thank you. You're not audible?
Ibrahim, you're like...
Am I audible now?
Very well.
Yes. Yes.
All right. I said, Mr. Solomon and Mr. Impeccable, hope your question has been answered. Mr. Solomon said, I wish there could be a recap of this wonderful training today. I think the YouTube link will be shared. You can go on our YouTube channel, Diaspora Digital Media, to watch the program again and to even share it with your own loved ones. And I would like to use this medium to plead with our resource persons, our speakers today, that the web link, Body Scan AI, should be posted again on this the comment section for the sake of new audience, and also for them to do their due diligence. So I think with that, we come to the end. As we have seen today, centralized exchanges may offer ease, but they also require trust. Trust in the very system that decentralized finance seeks to replace. Battle between centralized exchange and decentralized exchange is not just technical, it's philosophical. It is a clash between custodianship and control. In other words, freedom and friction. So to our viewers, which side of this digital divide do you stand on? I think I believe you listen to our resource persons, go deep in both centralized and decentralized exchange. So as we conclude today's enlightenment session on cryptocurrency.
Good afternoon. Good afternoon.
Hello.
Hello. Good afternoon. Good afternoon, all.
All right.
I've raised my hands for a while now, although my network was not stable. It's not stable anywhere. My name is Benjamin. I've always been here. I have questions because I wanted to ask a lot of questions before you conclude, please.
All right, go ahead. For the sake of the time, please 2 minutes.
I understand. I've been raising up my hands. I don't know whether you see my hand being raised or this was, huh? Okay. My question is for a while now, I noticed that some persons have been, some of my group members are asking, why is this thing going down, going down? I told them to calm down, that if they are there to hold. So my question is, does it mean that some of our members or some of other communities are trading this on a daily basis? And if yes, then why is our community, do you think that our community will still have to overpower them? These people that are trading this on a daily basis, all this kind of, I don't know whether you get my question.
Yes.
All right. In as much as the program is not about body scan AI, but I just want you to understand one thing with cryptocurrencies. All right. Like I said, it's a volatile market. It is all right. And one thing that people need to understand, remember, I made mention, even in my discussion, I talked about when this token gets to the central exchanges, all right, adoption will be high. And before you know it, the price will begin to skyrocket. The more buyers you have, the higher the price, okay, based on the law of demand and supply. All right. So you seeing it maybe going down, it's because of the market dynamics. All right? It's because of the market dynamics. As more adoption comes on board, all right, you see it also taking its normal position and even beyond your widest imagination. So that's why people need to come for more training so they can get insights, they can get understanding on how the blockchain and cryptocurrency phase works.
And I think
Thank you so much.
to add to what Prof said, you know, the size of your dream determines how I mean the quantum of wealth you want. So some are after if they see like a 2% gain, they are there to pick it because that's the size of their dream. But for some of us that I recently joined the bodies, I invested in the body scan AI. I have a big dream because one thing I know is that now it's even on DEX. By the time the app is launched, is deployed to the OIS and then Android devices. And then by the time we are listed on a centralized exchange, I know I will definitely be the winner. Those that are you know, after $1, $5 will certainly have their regrets in the past. Just of recent, somebody bought, I think, $27 worth of, is it?
Pepe.
Pardon?
Pepe.
Yes, Pepe, exactly. The $27 worth of Pepe that he kept for 600 days. I think last week or so, he made news because that $27 became hundreds of millions of dollars. If he was after, pardon?
$51.7 million.
$51.7 million. $51.7 million from $27 $27 investment within 600 days. It means this person has had a large dream, so he preferred to hold. But we cannot, because this is a decentralized exchange, is a free world. But then the size of your dream determines how far you get with body scan AI. Thank you.
Thank you so much, Prof. In fact, I've been following these lectures. I wish that we have the whole day talking about it. Please, I have so many questions. Number one, you know why I'm enjoying this? Our problem in Nigeria, there is one question that I wanted to come in. Our problem in Nigeria is that three things. No, don't spoil Nigeria. Let me use broken English. I'm sorry, I'm bringing it to Nigeria. I mean, generally, sorry. Nigerians are good. We are all good. Sorry. So what I'm saying is this. Before I make my own contribution, is there any app apart from Dex 2 that makes use of Trader View? Trader View. Is there any other app that can enable me or that can help anyone, use candlestick to view small scan and body scan AI?
All right, Mr. Benjamin, I will advise, I don't know if you are on the group. These questions should be
I am.
channeled to the group. Okay, can you please channel
Okay.
these
Oh,
questions
okay.
to the group
Sorry.
so that we will
Okay,
not
this one is not
consume the
necessarily for.
time? This is
Okay,
not
this one is.
for body scan. Okay, channel it to the Dama Academy group, and then we'll attend to you there, please. Is that okay?
Oh, so sorry about that. I thought that this is a Dama Academy
No,
number.
no, no. This is not purely Dama Academy. All right, this is blockchain world.
So sorry about that.
On,
This is wonderful.
on Diaspora Digital Media, we're partnering with them.
Because almost all the lecturers are still
Every
are like,
Wednesday.
yeah?
Yeah, every Wednesday at
Okay.
this time for
Oh,
Blockchain World.
okay.
Yes, yes.
Okay, wow. Because
But then be at our
almost all the
evening
lecturers
events.
are still the lecturers in Dama Academy.
Yes, be with us anyhow in the evening for Twitter space. We'll share the link. We'll be going on Twitter later in the evening. You can still ask your question there, or you can throw it on the general group. You'll be attended to. Thank you.
Okay. Okay, please, like I said before, please, the link, the YouTube link that will enable us to download the, 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 the lectures. I would like to
We'll
be able
share
to
it.
download it.
It will be shared
Okay.
once it is ready.
Okay. Prof, thank you so much. And madam, I've forgotten this name again. That suits me a lot. Thank you
Oloma.
so much for the lecture.
You're welcome.
Hello, no, is it digital mommy? I prefer digital mommy because it's bigger than the other one before I bite my tongue. Thank you so much and God bless you.
Thank
It
you.
was a
Thank you,
welcome.
Mr.
wonderful lecture.
Thank you, Mr. Benjamin. Thank you for your contribution. And don't forget, you can drop your number for you to be added in the general group. Anyone that is interested, drop your number. Add you up
I'm
in
doing
the.
it right away. I'm doing it right away.
As we conclude today's enlightenment session on currency, understanding centralized exchange, we want to sincerely thank you for your time, attention, and thoughtful engagement. For our dedicated followers on this platform, drop your contact. Drop your contact. I said the mistake we can make this year is not tapping from the fountain of knowledge of these resource persons. Our profound appreciations goes to our distinguished speakers, Mr. Moses Obaje, AI Prof, and Mrs. Sipra Pluma, our digital mama, for simplifying complex concepts, distinguishing centralized exchange from other systems, and giving us the tools to navigate this platform more wisely and securely. As always, this session has been proudly sponsored by the Digital Assets Management Academy, DAMA, based in Garki, Abuja. DAMA continues to lead the charge in digital education across Africa, offering industry-relevant training in blockchain, cryptocurrency, artificial intelligence, cybersecurity, and more. If today's session inspired you or left you waiting for more, then DAMA is your next. Our instructors, just like the ones you have learned from today, are committed to equipping you with the skills you need to thrive in the digital economy. A registration is currently open, and we encourage you to reach out directly to learn how you can join the academy and take your knowledge to the next level. Thank you once again for being part of this community. I remain Ibrahim Umar Wasi and my co-host, Mr. Tochukwu Raphael. Goodbye. See you next week, Wednesday. Bye-bye.
Bye.
To the moon. To the moon. What I've seen from the current. But this kind to the moon.
Thank you so much, guys.